Welcome back to Cheddar Business.
Over the weekend, the number of coronavirus cases and deaths tripled, and Wall Street is now reeling from the spread of this global outbreak. Joining us now, Stephen Skancke, Chief Economic Advisor at Keel Point Wealth Management and former U.S. Treasury staff member. Stephen, it's good to have you with us. The Dow down almost 500 points today. Are the markets overreacting to this?
Well, we can make that observation that they're overreacting, but really there's so much uncertainty that the markets can't understand what the impact of this is. And when you think about it, it's not only an impact on the Chinese economy, but the economies of other countries that trade with China, including the U.S. You have companies like the U.S. Airlines, Disney, McDonald's, Starbucks, all who do business in China, auto manufacturing, auto sales, all of those things are wrapped up in it.
Right.
And to get your head around that is really tough in a short period of time.
In this globalized world, Stephen, what industries or what sectors could be immune from this?
Well, there's almost no sector ultimately that's immune from this because China is so integrated into the global supply chain, both as a producer and exporter and also as an importer. So it'll just take time for investors to sort out where the vulnerabilities are and indeed where the opportunities are.
Well, you look at stocks like American Airlines down 5.6% today, Stephen, and even though the impact is likely, as we've seen, to impact China and Chinese consumers the most, certainly some U.S. companies are reeling from this. United Airlines, for instance, down 5.5%. From what we know in the U.S., 5 cases now confirmed in the U.S. Do we have a sense of the economic impact that is going to be felt here in America?
It's hard to get that in such a short period of time, but just with the companies that you mentioned, Kristen, obviously travel to and from China is going to be down. Whether it's business travel or leisure travel, people just aren't going to take the risk, and those passenger revenues are forever lost. In the spectrum of things, once this gets sorted out and there's an understanding of the containment and the risks, those things should pop back pretty quickly. And while some of that's never made up, the amount of travel that will be done, except for some leisure travel probably, comes back. Sales in outlets like the ones we mentioned earlier, probably lost. As you pointed out, this is a busy retail time in China with the Lunar New Year. Are those sales lost? Some of them probably are. So to the extent that U.S. companies were involved in the manufacturing, the sales, the imports, those things, that'll have a dent. At the end of the day, U.S. economic growth, probably we won't even notice the difference.
Okay, well, what should an investor do? I mean, what are you advising right now? What are you saying to people about their portfolios and how they should approach the crisis?
Well, certainly in the first instance, not to be afraid, not to be selling things that you believe in and have in your portfolio for a reason. And where there's money available to invest, this strikes me as an investment opportunity as markets overreact, as they typically do in these sorts of situations.
Stephen, where would you be investing as you see this as an opportunity?
Well, just the companies, well, first, broad markets. It's a great opportunity. You're showing what's happened to the Dow, the NASDAQ, the S&P, just broad market investment, because a lot of the companies that sold off will not be impacted at all. And then if your analysts show particular opportunities in individual companies that have been sold off the most, those would seem like opportunities as well.
When it comes to a buying opportunity, I mean, how much do you think markets could dive on this news? I mean, potentially, if we do continue to get more alarming figures from the World Health Organization, from China, and from other countries, even new countries where the virus has not spread yet, the markets could pull back more, no?
They certainly could. It's hard to know how far they could go because it really depends on how long the uncertainty continues. We see some of the health experts pointing out that so far the deaths and even those who are identified in China with the coronavirus don't yet measure up to a typical flu season mortality situation. If it is contained, as the Chinese seem to be working very hard to do, and there's an understanding from global health officials that it's not going to be materially different from other versions of viruses that happen each year, then all of this could bounce back very quickly.
Stephen, let's get your take on the tech earnings that we anticipate this week. Like technology, the economy has changed. We all know that, especially here at Cheddar and our viewers. Technology, a much bigger portion of the overall economy now. How important are these tech earnings to the overall market?
I think very important because we're very near the edge of whether we come in for positive, flat, or negative 2019 corporate earnings. The market is expecting it to be either flat or slightly negative, and the tech earnings will be a big part of that. So far, it looks like it's going to come in S&P 500 earnings for 2019 to be basically flat.
Stephen Skancke, Chief Economic Advisor at Keel Point and former U.S. Treasury staff member. It's always great to have you on the show. Thanks for joining us today.
Thanks. Great to be with you.